If you are brand new to the investing world, it can be overwhelming. Every investing website is telling you to buy and sell different stocks, when the next market crash is going to happen, what investments are the most tax efficient, and how government policies will affect your life. All of this you don't really care about. You just want to start investing and you don't know where to start. In this video, I will make it super simple for you to get started and let you know what simple investments you can make to participate in the stock market and start to build momentum. Hi, my name is Joe, and welcome to the Average Joe Investor channel. 11 years ago, my wife and I's net worth was negative $20,000. We had no savings. I was struggling to make it as a real estate agent, which I never did, by the way. And I was a financial wreck. Fast forward to 2021, and we have a net worth exceeding $250,000. Now, we have never made more than $100,000 in annual income over that time frame. I didn't start an Amazon dropshipping business. I didn't make it big with owning Tesla stock or any other individual stock. I didn't inherit my money. We made it to where we are today through hard work, being intentional with our money, and investing every single month. Now, when you first get started, it can be very difficult to figure out where to invest your money, even if it's just $100. There are literally thousands of different investments you could make, which is completely overwhelming. The key to getting started is to, well, get started. To do that, you need to first open an investment or retirement account with a brokerage. This video is not about which brokerage account to open, but there are multiple options. I have personally used Robinhood, Webull, M1 Finance, and Fidelity. I personally found Webull to be a little bit difficult of a layout to work with. I really liked Robinhood and M1 Finance for their layout and simplicity, and I currently use Fidelity because of their level of customer service if I need it. Like I said, as a new investor, the investment options available to you are overwhelming. Individual stocks? How about dividend stocks? Index funds, mutual funds, closed-end funds, growth versus value, large cap versus small cap. Thankfully, there is a very simple way to start investing and to participate in the stock market without needing very much knowledge. The answer is index funds. Index funds make it easy for the average Joe investor to start investing with little investment knowledge because they do the hard part. They buy many different stocks to diversify your investment. You've heard of the saying, don't put all of your eggs in one basket. That's what we're talking about here. Instead of owning just one stock, you own many different stocks. Instead of having all of your eggs in one basket, it's kind of like having one egg in like 400 or 500 different baskets. An index is a group of stocks. For example, we have the NASDAQ 100 index, the S&P 500 index, the Russell 2000 index. By investing in an index fund, you pay a small fee to an investment company, and you can then focus on the more important part, consistently investing moving forward. So what is the simplest way to start investing? Start with a total stock market index fund. There is more than one of these because multiple investment companies have a total stock market index fund. This investment is unique because you actually own a little bit of the entire stock market. Big companies, small companies, and everything in between. In my opinion, the simplest way to do this is to own the Vanguard Total Stock Market Exchange Traded Fund. The ticker symbol there is VTI. Now, I use the term index fund, and that can actually be used to describe both a mutual fund and an exchange traded fund. The difference between those two are minute. It really comes down to how they trade on the stock market exchange. In both cases, though, it's really the same type of investment. You are owning a basket of stocks that track an index. Now, I generally choose exchange traded funds or ETFs over mutual funds because you can purchase them with any brokerage, whereas most mutual funds will usually add extra fees if you don't have your account with their company. This is the Vanguard Total Stock Market Exchange Traded Fund. Ticker symbol again, VTI. Like all index funds or exchange traded funds that are passively managed, they track an index. VTI seeks to track the performance of the CRSP US Total Market Index. It includes large, mid, and small cap equity diversified across growth and value styles. In other words, you capture the entire stock market, large cap, mid cap, small cap, as well as both growth and value types of stocks. The huge benefit to owning the total stock market is you own the total stock market. Number of stocks in this exchange traded fund, 3,000 $980. You own part of the basic materials sector of the economy, consumer discretionary, consumer staples, energy, financials, healthcare, industrials, real estate, technology, telecommunications, and utilities. And you'll notice that you get to take ownership in some of the most popular and largest companies in the United States, including companies like Apple, Microsoft, Alphabet, which is Google, Amazon, Facebook, Tesla, Nvidia, Berkshire Hathaway, JP Morgan Chase, and Johnson & Johnson. Now, like I mentioned, with every type of index fund, exchange traded fund, or mutual fund, you're going to have to pay a cost to the investment company to have the convenience of owning this basket of stocks and not having to do it yourself. This fee is known as the expense ratio. Now, Vanguard is known for having really low fees. The expense ratio for this exchange traded fund is 0.03%. Let's say you have $500 invested in this ETF. You take $500 and you multiply by 0.03%. And that means that every year, if you had $500 invested, your total expense would be 15 cents. That is a really low fee, especially when you consider just how much convenience you are getting out of owning VTI. Now, currently, VTI trades for approximately $229.04. That was the final price as of the most recent business day. Now, that doesn't mean that you have to have that much money to start investing. The great thing about exchange traded funds and mutual funds is that often you can start investing for as little as $5 or $10. And then you own what are known as fractional shares, meaning if you don't have enough money to own a whole share, you can own half a share or a quarter of a share. VTI over the past year has had a total return of 33.25%. Their 3-year return on average every year is 17.89% growth. Every year average for 5 years, 17.99%. Over the past 10 years, 16.20%. And then since inception in 2001, the average returns every single year, 8.97%. Like I said, the great thing about owning VTI is that you have ownership in the entire stock market. Additionally, it's an ETF, which means that you can have your account with Fidelity or Schwab, M1 Finance, Robinhood. It doesn't matter. Almost every investment company or brokerage out there will allow you to purchase VTI for no fees, no charges. Now, we're just talking about one single exchange traded fund. Do you have to keep it this simple? No, you don't. But make no mistake, you can absolutely, consistently invest in just this one investment and become financially independent in the future and create the retirement you want to live. In the times we live in, we have access to so much information and so much data. It is easier now, more than ever before, to learn to invest. But at the end of the day, all of that investing knowledge in the world doesn't make any difference at all if you are not actively contributing money into your investments consistently. So get started if you haven't. Your future self will thank you. Make sure to leave your 2 cents in the comments below. Are you a brand new investor and you're just getting started? Let me know. What did you invest in when you started? Also, make sure to click on that red subscribe button to be alerted to all of my future videos. If you do subscribe, make sure to leave a comment below saying you subscribed, and I promise to respond to you personally in the comments.